If you've been watching US equities over the past year, it's fair to ask a simple question. How has this market held together? We've had geopolitical shocks, policy uncertainty, supply chain stress, and a constant stream of headlines warning that the next shoe is about to drop. And yet, US equities have continued to show resilience. That strength isn't accidental. It reflects a market that has absorbed real stress historically, recovered, and continues to adapt even as new risks come into focus. A good place to see that resilience in action is by looking back at Liberation Day. Tariffs upended a decades-long global trade order, markets sold off sharply, volatility spiked, and recession fears surged. But the damage didn't last. US equities rebounded at a historically fast pace. Corporate margins held up, and earnings growth stayed surprisingly strong. Instead of breaking, corporate America adjusted, rerouting supply chains, managing costs, and leaning on pricing power. It was a reminder that shocks don't have to derail US equities. Often they simply force recalibration. That said, strength doesn't mean that there are no vulnerabilities. Consumption is still bifurcated, and a meaningful hit to high-income consumers is a tail risk to watch. Inflation remains sticky and now faces additional pressure on the energy front. Evolving dynamics within private credit remain on our watch list, as does lingering tariff uncertainty. On the other hand, artificial intelligence is accelerating economic change at a pace we haven't seen before, shortening the lifespan of some business models while creating entirely new ones. That churn can look destabilizing, especially at the company level, but at the market level, it plays to a long-standing US advantage. Deep capital markets, high business formation, and an index structure that has naturally shed losers and incorporated new leaders over time. There are still storms to watch: geopolitics, supply chains, uneven adoption of new technologies. But the bigger picture hasn't changed. US equities have remained strong over time, not because risks are absent, but because the market has absorbed shocks, adapted, and moved forward. The calm isn't complacency, it's resilience. And that's the Market Decode.